You tap your card. 1 second, maybe 2. Approved. You grab your coffee and walk out. But in that single second, your card was checked against your bank, verified for fraud, cross-referenced with your spending history, cleared through an international payment network, and a temporary hold was placed on your account, all before the receipt finished printing. What just happened is one of the fastest, most complex financial transactions in the world, and it happens 600 million times every single day. It starts the moment your card touches the reader. The payment terminal reads the chip or the contactless signal and packages your card details, your card number, expiry date, and a unique one-time transaction code into an encrypted data packet. That packet travels immediately to the merchant's payment processor, a company like Stripe, Square, or WorldPay, which acts as the first gatekeeper. The processor checks the basic data, stamps the transaction with a merchant ID and amount, and forwards it within milliseconds to the card network. The card network, Visa, Mastercard, or Amex, is the infrastructure layer most people never think about. It is the system that routes your transaction to the right place. The network reads your card number, identifies which bank issued your card, and forwards the transaction data to that bank. Your bank, called the issuing bank, for the actual approval decision. This routing happens across private global networks that Visa and Mastercard operate independently of the public internet, running with redundancies designed to maintain uptime above 99.999%. A single hour of downtime would cost the global economy billions of dollars. Your issuing bank now receives the transaction. It has roughly 1 to 2 seconds to make a decision. In that window, it runs the transaction through a series of automated checks simultaneously. First, it confirms your available balance or credit limit. Second, it checks whether the card has been reported lost or stolen. Third, and this is where it gets sophisticated, it runs the transaction through a fraud detection algorithm. Modern fraud detection systems are machine learning models trained on billions of transactions. Researcher Tom Fawcett, who pioneered work on fraud detection systems in the 1990s, helped establish the framework that modern banks still build on, using pattern recognition to identify transactions that deviate from a cardholder's normal behavior. Your bank knows where you usually shop. It knows the average size of your transactions. It knows what time of day you typically spend and in which cities. A transaction at 3 a.m. in a country you have never visited, for an amount 10 times your average purchase, will score high on the fraud probability model and may trigger a decline or a verification request, even if your card details are technically correct. The fraud model assigns every transaction a risk score in real time. Low score, approve. High score, decline or flag for additional verification. The entire scoring process happens in under 200 milliseconds. If the bank approves the transaction, it sends an authorization code back through the same chain, bank to card network, to processor to terminal, and the word approved appears on the screen. The merchant does not receive the money yet. They receive an authorization, a promise from your bank that the funds are reserved. The actual transfer of money happens later in a separate batch of settlement process, usually overnight, when the merchant's bank and your bank reconcile all the day's approved transactions through a clearing system. The security layer running underneath all of this is EMV, the chip standard developed jointly by Europay, Mastercard, and Visa in the 1990s and now used on virtually every card in the world. Unlike the old magnetic stripe, which stored static card data that could be copied and replicated, the EMV chip generates a unique cryptographic code for every single transaction. That code is valid for that transaction only. Even if a fraudster intercepts it, it cannot be reused. This is why chip and PIN fraud rates are dramatically lower than magnetic stripe fraud rates in every country that has adopted the standard. The contactless version of this, the tap you did this morning, uses near-field communication, or NFC, which transmits the same encrypted data wirelessly over a distance of a few centimeters. The same one-time cryptographic code is generated. The same authorization chain runs. The only difference is that it happens without physical contact, in slightly less time than it takes to blink. So the next time you tap your card and the machine beeps, what you just initiated was a real-time encrypted negotiation between 5 separate institutions across private global networks, evaluated by a machine learning model trained on billions of data points, Complete it in the time it takes to say the word approved.